Good morning. What's going on, everyone? We have a filing to discuss. It's the SR NSCC 2021-009 Notice of Filing of a Proposed Rule Change to modify the rules and procedures of National Securities Clearing Corporation in connection with the implementation of Section 1446F of the Internal Revenue Code of 1986. And again, I apologize for my mistake last night, still recovering. However, I did get some sleep, so I should be slightly less retarded today. So the timeline of this was filed July 19th, showed up on the register today, July 22nd, should be approved or disapproved 45 days from tomorrow or 7/23. Now the purpose of this is to change, the purpose of this rule change is to amend the rules in connection with the implementation of Section 1446F. Now 1446F, according to 26 U.S. Code, is the withholding of tax on foreign partners' share of effectively connected income. And then paragraph F says special rules for withholding on dispositions of partnership interest. It says here, number 1, in general, except as provided in this subsection, if any portion of the gain, if any, on any disposition of an interest in a partnership would be treated under section 864C8 as effectively connected with the conduct of a trade or business within the United States, the transferee shall be required to deduct and withhold a tax equal to 10% of the amount realized on the disposition. So this is a tax withholding related filing. Pretty straightforward. The background on this, it was enacted December 22nd, 2017. Section 1446, that is, was enacted December 22nd, 2017. And then they issued various implementing regulations on October 7th, 2020, including the tax withholding required pursuant to Treasury Regulation Section 1.1446F. Now, Section 1446F generally imposes a 10% withholding tax on the payment of gross proceeds arising from the sale or other disposition by a non-U.S. person of interest in certain partnerships that are engaged in a U.S. trade or business. In such case, a tax withholding obligation is imposed on the buyer of the partnership interest, who is required to remit the withheld tax amount to the U.S. IRS unless or to the extent an applicable exception applies. The buyer obligated to withhold the 10% tax is liable for any amount that is under withheld plus associated interest and penalties. Now it says here that Section 1446F withholding is designed to ensure any non-U.S. person, either individual or entity, appropriately files a U.S. federal income tax return following the sale or disposition of its interest in certain partnerships. Now, the changes that are going to be taking place in regards to this, it says right here, in order to comport with legislative understanding underlying the Section 1446F withholding exemption, NSCC is proposing amendments to its rules to ensure that all NSCC FFI members that are members would accept the responsibility to perform the Section 1446 10% withholding. So basically, the NSCC is exempt to this withholding. Now, they're incentivized by putting this filing out to make sure that all NSCC FFI members would accept this responsibility, because if not, their exemption may be revoked, and that would not be good for NSCC because of their settlement obligations. Now, the term Section 1446F withholding compliance date would mean January 1st, 2022, or if the commencement of Section 1446F withholding is delayed beyond January 1st, 2022, under Section 1446F, 2 calendar months plus 1 calendar day before such delayed effective date. So I guess January 1st may be the day that this is supposed to be implemented, so we'll have to see. They're also proposing to delete FACTA certification and basically replace it with tax certification. The rest of the changes from here on out are technical changes. The main thing to take away from this filing is that they are going to be putting a lot more requirements in place regarding this 10% holding, and they're going to be requiring that all NSCC members must meet these requirements, or it could mean trouble for the NSCC. So in addition, an FFI member shall indemnify NSCC for any loss, liability, or expense sustained by NSCC as a result of such FFI member failing to be FACTA compliant or a Section 1446F withholding agent. So if you're not FACTA compliant, or a Section 1446F withholding agent, That smells, again, problems with NSCC because they do have an exemption from this, and that could be in jeopardy if they have too many people failing to abide by this obligation. NSCC believes that the proposed rule change to amend the rules in connection with the implementation of Section 1446F could impose a burden on competition because the change could impose a cost on firms that currently do not do U.S. tax withholding by requiring them to perform the Section 1446F withholding. However, NSCC believes any such burden is necessary and appropriate. Thank you. Thank you. Thank you. It is. So obviously we have members that have not been completing their U.S. tax withholding. So this is trying to put a stop to that. So in essence, the NSCC believes that when members better understand their rights and obligations regarding NSCC's clearance and settlement services, they can act in accordance with the rules. NSCC believes that better enabling members to comply with the rules would promote the prompt and accurate clearance and settlement of securities transactions by NSCC. In addition, each FFI member that is a member would have to provide periodic certifications to NSCC regarding its Section 1446F withholding agent status. Taken together, these requirements would help to ensure that all NSCC FFI members that are members would accept the responsibility to perform the Section 1446F withholding on a regular basis. And then it says right here, this ties into what I was saying earlier, by ensuring that all NSCC FFI members that are members would accept the responsibility, NSCC believes it would minimize the likelihood that the IRS and Treasury Department would revise the final regulations to revoke NSCC Section 1446F exemption. So, guys, we got to get you all certified so we can remain exempt. So they're going to be cracking down on this, requiring more members to be in compliance with this, and it should be in effect January 1st of 2022.